Hi and welcome to Swissquote's Daily Market Talk. It's Friday, March 28th. The tariff talk intensifies. The mood across global equities is sour and souring. Investors prefer to hide in gold. And it is in this difficult market environment, in these difficult market conditions, that CoreWeave, an Nvidia-backed cloud computing company specialized in AI, will face investors at its debut on Nasdaq today. So sentiment sours, as you probably noticed, with all the tariff talk that simply can't stop. Donald Trump very successfully animated the week before April 2nd with car and auto tariffs. The car makers around the world got hammered this week, of course. The ones that actually produce their cars outside of the US got hammered because their cars will cost 25% more if the levies go live, and nearly half of vehicles sold in the United States are reportedly assembled elsewhere than in the US, and the ones that are made in the US have at least 20% of their components coming from outside the United States. So Evercore ISI predicts that car prices in the US will likely increase by $3,000 to $4,000 on average, while cars coming from South Korea, Japan, and Europe could see their prices increase by more than $9,000. Congratulations, America. Have fun. Now, of course, the global ramifications are immense, and the sell-off that we see in the market is intense. GM, for example, lost more than 7% yesterday. While it's not really shocking to see, Tesla, for example, lose that much of its valuation in just one session, it is actually quite disquieting to see a traditional car maker lose that much of its value in just a matter of few hours. Then the South Korean Kia Motors lost more than 7.5% of its value from the peak levels of this week as well, and the Japanese Honda lost more than 9% since the peak of the week. The European car makers, on the other hand, posted smaller losses this week and yesterday because the tariff threats have already been partly and broadly priced in since a while. iShares SOX 600 automobiles and parts ETF, for example, is down by almost 14% since its February peak, while the SOX 600 index saw a smaller pullback over the past couple of weeks posterior to a remarkable rally on spending euphoria. Gold, on the other hand, is unsurprisingly pushing higher into uncharted territories, and the overbought market conditions that we see here don't matter at all right now when the geopolitical headlines are so aggressive and there is so much uncertainty out there, because investors just buy gold each time they hear the word tariff. And well, April 2nd, as known as the Liberation Day, when the US is expected to announce its reciprocal tariffs, so the rest of the world, is the next event to watch. So it is quite hard to be optimistic when we know that retaliation will certainly emerge from next week and uncertainties will simply continue to sit on the headlines. So as discussed yesterday, retaliation and the extent of retaliation will probably determine the next direction of the US dollar. Now, Donald Trump will obviously do anything in his power to limit the other's response to his tariffs. He actually threatened Europe and Canada yesterday that he would impose much higher tariffs than that if they teamed up to counter the US pressure, but the US dollar actually gave back a part of its recent gains at yesterday's trading session, hinting that the market, investors, and the pricing favors the expectation of retaliation from the others than otherwise. That would in return hit the US exports too, while trading partners then hit the US economic growth more than with just the US tariffs, boost inflation, hence boost the stagflation risk in the US. Stagflation being this terrible cocktail of slow growth and high inflation. Now, the Federal Reserve could eventually step in, of course, and give a so precious support, but the tariffs and the uncertainty around these tariffs will impact earnings negatively. They will impact the CAPEX plans as well, and would further hit the US equities before a potential relief from the Fed, for example. And for the others, well, the stock 600 index has pretty much consumed all of the energy from the government spending on infrastructure and security plans and is now facing earnings pressure from the tariff toll and the tariffs and all that uncertainty. So the pricing of that narrative is obviously negative and will likely lead to a pullback in the stock 600 index as well. The index actually tipped a toe below its year-to-date ascending channel base at yesterday's trading session and could well extend a correction into the 520 level. That would be another 4.5% retreat from the actual levels. The S&P 500, on the other hand, could retest the 5500 level in the next wave of sell-off, and Nasdaq 100 could break below the 19,000 psychological level in case of a worsening risk sell-off. And the rapid correction of the US big technology valuations that have already caused up to 20% sell-off from the November peak could eventually continue as well. Even encouraging and positive news from the big technology and AI names have been unable to find a good spot on the international scene and the international headlines to turn the tables around. So it is in this difficult market setup, in this difficult market conditions, that CoreWeave, the Nvidia-backed cloud computing company that is specialized in AI, will start trading today on the Nasdaq stock exchange. Now, obviously, the timing of this IPO is not clearly an ideal one, as the AI-related stocks have experienced a significant pullback in their valuations on the back of various factors out there, including the tariffs, the tariff uncertainty, the rising Chinese competition, but also on rising fears of a potential oversupply in AI versus the demand that didn't grow as fast as previously forecasted. So investors have been quite sensitive these days to the idea that the AI spending from all these big companies went well ahead of itself and demand is not following at the same speed. So it is in the middle of doubts and reevaluation of the big technology stocks and the AI business that CoreWeave will face investors today. Note that the news haven't been brilliant so far. Unsurprisingly, the company had to lower its IPO ambitions yesterday and pulled its expected valuation lower due to a weaker than expected reception during its roadshow. In numbers, CoreWeave was actually planning to sell around 49 million shares priced between $47 to $55 each, aiming to raise up to $2.7 billion US and achieve a valuation of approximately $32 billion US. But the company will finally settle with a sale of just 37.5 million shares at $40 each and aim to raise around $1.5 billion US. That's almost the half of the initial valuation. So that would value the company to around $23 billion US instead of $32 billion US. But even to justify that revised valuation, the company's revenue should grow by more than 25% annually each year for almost a decade, or by around 60% annually for the next 5 years. But let's think about 25%. That's around the revenue growth the data centers at Microsoft and Amazon have been printing over the past 2 years, but it is slowing. Now, this being said, this company, CoreWeave, printed an incredible performance last year. Their revenue rose more than 700% to about $1.9 billion US, but reported a net loss of around $860 million US last year. So the huge debt that the company accumulated, and we are talking about almost $13 billion US over the past 2 years here, should be partly paid back in the next few years. So the way investors will welcome this company today on Nasdaq will tell us a lot about whether they are still focused on impressive growth potential of AI enablers, or they are today more concerned about a relatively slower growth to avoid oversupply. So the answer is going to be given in a few hours. So this is all for this week. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again next week. And until then, good day trading and have a lovely weekend.